Hi, welcome to this brief discussion about the differences between an S-corporation being taxed as an S-corporation versus being taxed like a single-member LLC or sole proprietorship. The last two, single-member LLC and sole proprietorship, they're taxed exactly the same way on your personal income tax return on Schedule C. And before we get into that, I just wanted to give a little background on some of the taxes you can expect to pay as a sole proprietorship or a single-member LLC on your personal tax return. And they're called self-employment taxes. So what are self-employment taxes? If you look at a W-2 or your pay stub from an employer, if you were previously employed, you could pull one out. I'm sure you already know this, and I apologize for being so rudimentary about it, but just quickly cover that. You're going to pay 6.2% for FICA and 1.45% for Medicare as an employee. Then your employer matches those two amounts, which you don't typically see, obviously, but they do match it. And so they're matching the FICA and they're matching the Medicare for another 7.65%. The total, therefore, submitted on your behalf to the IRS for self-employment taxes is 15.3%. Okay, so now what's the difference between an S-corp? What's an S-corp going to do for me that the single-member LLC or sole proprietorship doesn't? Well, primarily, and we'll get to this, this calculation here. An S-corporation is not subject to 15.3%. That's basically the biggest difference. And in the discussion, real quick, I'll explain how that all works. So let's say in this example, we're generating $125,000 in the S-corp and the sole proprietorship. And then we have expenses of $25,000. So that's going to leave us net income of $100,000. Well, in an S-corporation, again, none of the income earned, there is no corporate level tax in an S corporation. It's not to be confused with a regular C corporation. We're electing as a small business to be treated as an S corporation versus a regular C corporation. A regular C corporation has its own separate entity and it's got its own tax bracket. It's got its own set of tax rules. But I won't get into the history of how the S-corp was created or why and all that. You can Google it and research it that way, or give me a call. We could have a more lengthy conversation about it. But in a nutshell, by requesting to file as an S-corporation, there is no corporate level taxation. All the income flows through to you on your personal return. So it's shown on a different line item than the sole proprietorship or single member LLC, but these are both taxed on your personal level. However, only the single member LLC and sole proprietorship will have to pick up that $15,300 on our example, 15.3% of $100,000. So that's a huge benefit. You could see that right there. So the only caveat is this, is that the IRS says, well, if you're going to operate an S corporation, we want you to declare some kind of reasonable compensation. You're earning money. This is earned income. So exactly the same as this, unless you're a passive investor and it's not earned income. So if you're actually earning this money, meaning you're billing something out, you're invoicing, you're actually working in the business, so you're actively working in the business, you're an active participant, this should be subject to some kind of self-employment tax. So even though structurally there is no self-employment tax, the IRS, you have to self-declare the amount that you're going to basically pay self-employment taxes on. So it gets a little bit confusing because there is no official guidance on that. You can't go to the IRS website and look up reasonable compensation based on your income. It's not, again, because there is no corporate level tax rate. There is also no guidance on how much of your income should be subject to self-employment tax, which makes it a little bit confusing and sometimes frustrating for the practitioner. But we know from various bulletins and court cases, where we could be safe with declaring reasonable compensation, and typically that's around 50%. Okay, so if we use a really simple example of 50%. Let's say out of this $100,000, we're going to say, okay, I'm going to declare 50% of it as wages, subject to self-employment taxes. So we're going to go ahead and do that. And so here's the reasonable compensation calculation. The IRS, wants us to issue ourselves some reasonable compensation. We have $50,000 W-2 that's going to reduce the net income that's going to flow through to us on our personal income tax return. This $50,000 here, this 50 is not going to be subject to any self-employment tax, just the $50,000 payroll and W-2 at the end of the year. So in our example here, the W-2 subject to self-employment tax, $50,000, is 15.3%. Okay, 1.153, $7,150. So we could see here the comparison. We would be subject to the full 15, and there's a self-employment tax credit on the personal tax return. So there's a couple other little calculations, but I'm just keeping this really simple and big round numbers. So you're going to have $15,300 at the sole proprietorship single member LLC level versus $7,150 at the S-corp level. S-corp savings therefore $7,150. Pretty significant amount of money when you're earning around $100,000. What can you do with that? A lot. You could do with that. Pay some debts off, pay some bills off, contribute to your IRA, 401k, maybe get a better health insurance plan. I mean, $7,000 is $7,000. It's nothing, nothing to dismiss. So with that, I hope this helps improve and increase your awareness about the differences between an S-corp and a single member LLC and sole proprietorship. If you have any questions, feel free to give me a call or send me an email. Thanks so much.